Well, good morning, everybody. Let's go ahead and get started. There is the opening bell right there in my ear. We're all ready to go. Welcome back to Trading Futures. My name is Mike Fairboard, folks. Today, we'll be looking at the markets on a longer term basis, on a shorter term basis, and really looking at maybe some of those shorter term trades, practice trades within the paper money account. Really to focus today on looking at the markets, though, it looks like we're a little bit, basically flat. We've been flat, really flat overnight. One economic announcement this morning that I picked up on. We'll take a look at that here momentarily as well, but would like to welcome you all here. I'm joined in the chat by my good friend, colleague, Brent Moores. Folks, any questions, comments you have, definitely throw those in the chat box. And if you haven't subscribed yet, bottom right-hand corner of the screen, just hit that subscribe button. Would love to have you on board with us. All right, well, let's jump into our disclosure so we get going here. Futures and futures options trading does involve substantial risk. It's not suitable for all investors. Please read the risk disclosure statement for futures and options prior to trading futures products. Some additional information there, as you can see, about futures and futures options trading. Futures accounts are not protected by the Securities Investors Protection Corporation, SIPC. Additional notes listed below here as well. Wanted to also state that Charles Schwab Futures and Forex LLC is a CFTC registered futures commission merchant and NFA Forex dealer member. Okay, some additional information. The information here is for general information purposes only and should not be considered an individualized recommendation or personalized investment advice. Now, the paper money software application is for educational purposes only. Some final notes here too. When selling short to establish a position, the upside risk to close that position can be unlimited, as there is no upside cap to how high the price of the index can rise. Stop loss orders on futures are not guaranteed in execution due to exchange rules based on certain conditions at the time of activation. The exchange may reject or substitute an exchange designated limit order for the originally triggered market order. So with that, let's dive into our discussion here and look at the markets, folks. It's been a long, steady upward trend, as you can see on the chart here for the ES. I want to point out too, within the ES, if we were to overlay here an indicator, and that's going to be just our linear regression line. I'm going to do the linear regression 50 here, the channel 50. I'm going to throw this out on the chart so you can kind of see it. It gives a general sense of where we're at, where kind of the mean range is, what some traders refer to as the mean, which is kind of that linear regression point outside of the standard deviations up top and below here. A pretty good march higher. Are we on the verge of another higher high? Well, another all-time high. That's been kind of the theme this week, is it's just been kind of a steady march up. I guess we'll find out real soon here, but a rather flat market this morning across these market indices. In fact, let's look at the top four here. Yeah, I guess the biggest one is the Russell, which is down 0.11%. So not much movement there. A quick note, when you are getting these moves up, and I've highlighted this in one of the additional classes this week, is that if we go to a 2-year chart, I don't believe I'm seeing one here. Let me go ahead and just, I'm going to put one in here. Well, I can just quickly go down to it. There we go. Here's our 2-year. And I'm going to highlight this point. You can see that we've come close to this upper range a few different times. There's not really resistance if it's all-time highs, right? I mean, in terms of resistance like prior highs, because it is an all-time high range here. You can see we're getting very close to that upper point where we've bounced off of. But a quick note is we haven't really come and touched off that line yet. And so what that enables us to do, linear regression being an interesting guide there, what we can do is we can use one of our just drawing tools right off the Thinkorswim. I'm going to draw this through here so we have an interesting sort of a kind of an additional line here that we can kind of reference to maybe where those highs are. And you can see we're still very, very close to it right there, but it's just slightly below, you could say, the linear regression line. But we are getting up towards that upper range. Now we'll see, if in fact the market does unfold in a seasonal fashion. This is an average down below. Seasonality is an average of the S&P down below. Seasonality is an average of the last 5 years, as we've got it depicted up top here. And you can see over the last 5 years, on average, we have inched higher. We're kind of doing that right now, so it is looking a little bit seasonal. Not to say that it will be seasonal, that is the question, but thus far, we've been getting a higher range and moving in that way. So will it end up like the average? It might, but just keep in mind those upper trend lines could be of interest, particularly as we're taking a look at longer term trades and how they might impact the shorter term aspects of the ES, for example. All right, or the market indices or the futures contracts. All right, let's do this. I'm going to hop back to our regular setup, and I wanted to let you know what I was looking at this morning. I was looking at the Dow that had and what I've done is I've detached the Dow and put it over here. We might be actually getting a setup right now on the Dow. Oh, as it's coming down, here we go. So let's go ahead and just sell this right now because it's breaking low. I don't know if we got the exact right time, but I tried to capture it as quickly as I could here. As we're breaking below that center pivot point. I've got, I want to adjust that potential stop order that I had mentioned previously, and we'll kind of keep this limit order in place right now, but it was happening so quick, we didn't even have time to go into some of our other discussions, but well, again, it was a little too slow, but at least we could try to put a paper money trade in here even as we broke a little bit lower, okay? So normally what we would do is we can adjust this 2 ticks above the S1 level. I don't know if that's there. And by the way, we'll also keep eyes, this is just a single contract, but we can also keep eyes here on that 50% mark that sometimes prices will come down to before they bounce. All right. And our stop is going to be based upon an ATR down here. What is the ATR set at right now? Well, we could do a 1.5 to 2 ATR, but let's say if we did a 1.5, if we're looking at, let's see, the ATR right now is about 23. So let's just pull up our calculator. 1.5 ATR on that is going to be 1 to 1 ATR is a lot of time. Oh, excuse me, 1.5 to 2 is what we've been talking about for this discussion. This potential, trading system that some traders will use on that ATR is a 14-period Wilder, and yeah, so it was about 20. Well, we just say 23, 24. A lot of times I might just average it down to about 20, to be honest with you. That's what I'm going to, you can round down or up to the next level. It's not too, I mean, it's a consideration you want to look at, but sometimes you can round those down. They don't necessarily have to be exact levels. But there we go. We'll see what we get here. At that, I'm just going to multiply that by 1.5. It's going to be a 30. Pretty straightforward there. But I'm going to assume that our entry was 2 ticks below this level. So I'm going to actually take this up. Let me just see what that number is going to be. This is just a quick way to do this. And it's not going to be exact. You can go in and measure it exactly. But let's say we took this a couple of ticks below here. I'm just going to measure up 30. That's about right here. Yeah. Tell you what, we'll compromise between the two and we'll just kind of leave it right above that high. So we're going to have to break above this high here. Whether we're using, hang on a second, got to get back to my drawing tool here. Whether we're going to use a 1.5 to a 2 ATR, sometimes this decision making can be done based upon, hey, the previous high here, or are we close to the previous high? Is it within this range? Do we take the 1.5? Do we take the 2 ATR, 2 times the ATR? You might be looking at it, because there is, some traders would say there could be resistance right there above the prior high. And so we're kind of in between this range, and I've just set us up just above this high. You'll notice too that we're right near that VWAP level, volume weighted average price. We'll see if we get if this can hold or whatever the case might be. And by the way, too, if you do get a slow meandering downward move, sometimes traders might decide to take this at the 50% level. And that's something we could do. I'm just getting the range between the center pivot and the S1 level to represent our 50%. This was really tricky this morning as I watched this trade, by the way, because it did bounce and it gave us like a close above the high of the low bar. Can't say day, but it's because we're just on 5 minutes here. But we closed above that bar and began to run higher. two key things as to why I didn't put this on. I was going to potentially put it on if we were going to close below here a couple of times. We didn't even close below here twice. Normally look for a 2 close below if you don't have the trend in your favor. And what did we have here? We had a downward sloping move. Notice what's the direction of the trend, folks? Direction of the trend is down. And so it might mean that you'd have to go against the trend to break up above higher. So in other words, you'd have to make a new high and a new low, and then, continue up if that's all you were basing this upon, was a bounce off of the S1 level. Does that make sense? The trend's against you. You're below the volume weighted average price. There would have had to have been a pretty big move here in order for us to break that downward trend and just to go higher and change the trend. But we don't know what we'll get. That's a pretty big hammer right there. So we shall see what we do get here at this point. But the other thing is too, if you see a lot of consolidation through here, sideways movement, and you're holding this level and kind of testing higher, well, that might mean that we're positioning for the possibility of a bounce as well. So there's a lot actually going on a 5-minute chart you really got to keep eyes on, right? Another thing too is, what if this VWAP line continues to dip on down and then shoot, we start to break above it? Well, even though we might not be above this potential exit point listed as our stop here, we still could consider closing that trade out, right? Because we might be getting a double bottom formation now. This, by the way, notice I had detached this. If anytime you don't want to, for me, it's really important. I mean, in terms of presenting and showing, I want to have this chart up so that, we can jump into these things quickly. And how I did that is I actually unlinked it so that when I type in a new symbol, it doesn't affect this. And then I went up top and I hit detach. As you can see, it's a separate window, which I'm going to keep an eye on my separate monitor and making it easier for us to jump back into, okay? Because we got to talk about the other ones right now as we go into this. But you can see we're still down, and that could be a positive for our position. One of the things that can be risky is when the other markets start to show strength, because there are correlations too between the other markets. And if they start to go positive, well, that could hurt our existing chances for the YM to dip lower. Okay. All right, I've got eyes on it on my second window though. So let's do this. I want to do a futures overview real quick, but we didn't have time because there was just so much going on. But you can see, like I mentioned earlier, there's just a lot of sideways action, right? Overnight, it was just so slow. There's a little bit of a spike here, but then, we came right kind of back down to it on the ES. The weakest one clearly was the YM down here. You can see the NQ very similar to the ES, but the YM, the possibility of a short trade on those pivots because we are going down. The trend is still lower. That is a new low, and that was a lower high. So we'll see what happens here. The Russell kind of hitting that level as well too. We'll see what happens. In terms of what we'd like to review when we get here is just the economic data. And I just wanted to say that the main one that I saw, well, one of them that I saw this morning was just the initial claims for unemployment. Just reading right off it here. It rose 9,000. So it went to 224,000 relative to the expected of 215,000. So that was the additional 9. So it was a little bit, you could say, weaker numbers in terms of, they wanted to see more, they wanted to see those numbers dipping. So it's weaker if it goes higher. There was just more initial unemployment claims. There have been some layoffs going on around there, as I've noticed with some of the bigger companies too. So I was actually wondering when that might hit. But that was the one. It was not a huge miss, but 9,000 more than expected under the initial claims today. So not positive, but not maybe too much of an impact just yet as we're looking at it here. Okay, so we'll keep an eye on that. We're really still holding very close to that center pivot, the main pivot line, and there is the main pivot line, and so we'll see what we get here. But if we just kind of go flat for a long time, we might just flatten the trade out. Because why? Well, it could be showing support here. And look at the VWAP. The VWAP happens to be dipping. That's the volume weighted average price that we've talked about. where traders would take trades to the downside when it's below it or upside above it. But if that begins to continually weaken, uh, and gets closer to that line, then there's just more risk of us popping above that level and the possibility of a change in trend too. So a few things going on, but we'll give it a couple more ticks, potentially see what's going on there, and then we could decide what we'll do. Pull that back down on my other window. But like I said, it's a little tricky. Remember that center pivot point, or the main pivot point, is where you really have to decide, are you going to take the trade up or the trade down? You can take it either way. It's not like the S1 level. I'm just going to pull that back up. It's just easier to do on this. I'm just going to explain this, but it's just easier, just as a quick reminder. Yeah, and here we are just kind of sitting here still. But yeah, to the upside or to the downside here, that's the question mark. But that's all we've really got today in terms of what we're seeing here thus far. Right now, it's with the S1 level, you would only take the trade to the downside. Or the R1, you take it only to the upside. But this is the middle one. That's why we tapped into the trend, VWAP, etc. But right now, just really, really slow action here. So if we get a couple more bars like this, or obviously we break higher and hit that stop level, we'll see if we get a fill on that. Okay. All right, that's that. So let's continue with some additional indications here as we look at this. Real quick, as we look big picture, though, at the general markets, let's go to the ES. That is copper. Here is ES. It's a little challenging when the ranges get tighter and tighter and tighter through here. Although prices are going up, as you'll notice, even on the pivot points, it's just kind of a sideways range, right? So there might not be a lot there when you're not bouncing off a support level or whatever the case might be. Sometimes that can occur as you look at that. All right, let's do this. I'm going to go back over here. Let's go to our futures metals overview and see how they're doing in terms of sort of an overview here. You can see that really gold is somewhat sideways, holding near that center pivot point. These are the center pivot points I've got on. Silver above the center pivot looks to be the strongest thus far this morning, holding above the center pivot. And you'll notice that there was a fairly big spike over here on silver that did clear some prior highs. I want to look at silver. That's going to be one of the ones we're going to actually focus in on a little bit today. But it's been going higher, maybe holding and maybe showing a little bit more positives. I put a positive here because I would say it's more positive than the others. Obviously, copper, more negative. I mean, clearly a downward trend. We're just kind of resting at or hitting the center pivot here, and PL as well, breaking lower too. So let's look at a couple of these right now, add some potential trades, and I'm going to show you just over here, gold first. Let's go to GC. Now GC, as I've highlighted here, it did have, and I've got this, the way I've got this set up is a daily 60-minute, 5-minute. Do you see that? Daily 65. These are really helpful if you plug these in just over here into a grid, because with this, all I need to do is just quickly just go over and I can show you where I drew that 60-minute on. And by the way, that 60-minute, it's a 90-day. Here's your breakdown in gold. We had a nice recovery back up. That's pretty strong, right? Pretty strong. But then we came back down into this sort of a symmetrical triangle here, which is not really an unusual pattern on a pullback at all. It's not necessarily unusual. But we did break above that, right? When you break above the range, that would be more of a indication of the positive move. So it could mean that this trend could then continue to the upside. The longer term, upward move could continue to the upside. But then we kind of paused a little bit here as well. So what I did is I just put in, which you could do because when you break out of this line, it can represent strength. But notice gold coming down right now. It's down about 9.4. I went to the 5-minute, one more over, and I just drew on it another trend line off here to the right. And we don't have enough room to the right. Let me move this over here. Time axis. Is that 25 bars? It must be. I'm going to go like 50, double this so we can actually get a projection out here. There we go. All right. Yeah. All right. There it is. So I've drawn across these tops. Actually, I think I did this on a 60. Yeah, I did. I drew it on a 16-minute, but you can take it down to a 5. But there you go. So here are the lines off the bodies of the candle, the line drawn off the body of the candle, downward sloping. And this is kind of like here's kind of like your possibly your first break, but then, after you've broken out again, can you break over one more time? Because doing so would potentially establish this, and that would be the higher high on a shorter term basis and the possibility of a higher low. So the second trend line break, if we get it, could get us up to, there's the fill. So YM shot up. Yeah, it did. It just hit our let me just quickly show you that right now. Yeah, it hit our upper level. The stop was triggered, and then I just saw the exit right there. So there is your bounce. And notice we are above the VWAP line. So had we been watching this close, we got to talk about other things too. But we just said, hey, if you're going to break above that VWAP line, that could be also a potential exit point. And we could have pulled back the exits down to that VWAP level, for example. Okay, we'll see what happens. It's still back to that same resistance point, but that was the fill. I'm going to pull this back down. we have no choice but to talk about other things too, but I've got an eye on it. But anyways, it was close anyhow. To the level of exiting, as it were, anyhow. Okay, so here is that second level break, and then with this, you could get a higher high and a potentially higher low. That's the question, right? If you can break above this point, but the trend line could be of use to us here. Now, what I'm going to do on this secondary trend line coming down, I'm going to right click on it. I don't know if you guys knew this. It's really quite cool, but you can, if I'm not in paper money, and I am in paper money to get these trades on, but if I'm not in paper money, what you can do is you can right click on here and set up an alert based upon the downward sloping trend line. Notice over here, I could do alert here, but this is going to be like at this level. I'm going to go ahead and just put it above this high as opposed to that trend line. Create an alert at that point, so it just notifies the computer. It notifies us as we're in this room discussing that we've taken out this level. Okay. But like I said, if you're like in like a more of a live account, there is that ability where you can right click on your trend line and it's just an alert with the drawing is what it says. Right now we have the horizontal ones in our paper money, which we're in right now. Okay, so cool. Really what I wanted to do was take a look at silver in terms of the possibility of an entry here on silver. And big picture, before I go into silver, let's take a look at the big picture here. A couple of notes on silver is that silver has been lagging gold quite a bit. But big picture, and I'm going to show you a gold-silver ratio here in just a second. But you'll notice this pop to the upside right there as you're just breaking above this range right there. That's a pretty sharp move off the bottom, and we held that 30 pretty nicely. Now, it's estimated that about 50% of the use of silver right now is used in the EV areas for electric vehicles, etc. But there's a big push, a big demand for solar as well. So you can see what silver has done. Will silver reverse this upward trend? And are there possibility of opportunities in here? That's the question, right? Will it resume higher and move to the upside? So that's our question here with silver. I wanted to show you this on a shorter term basis, and you can see that breakout. And when you look at this, and we just get more data, which is what we're getting on when we look at an hourly chart, there's just more data to look at. Here is that sharp upward move recently, clearing those longer range high points, and we're kind of bouncing in this range right here. And so the question is, will this go higher or not? For silver, here's a quick look at the 5 minutes so you can see the 5. Okay, now folks, that I've zoomed into the 5, are you seeing anything here of interest? Where might there be a level that you could say if silver's going to break out and go, it's got to cross this level first, and there might be resistance there? Any thoughts on that? I'm going to point this through here. Look at this. See that? the 5-minute gives us a lot of indications. Oops, I didn't mean to dip that down, but you can see even like right through there, there is a lot of resistance short term, but that's the backstop behind that is really kind of a long upward trend. And so can it break out? That could be the question, and that could be the possibility of a trade here. Now, how might a trader trade this? We can look at the pivot points. We've done that before on a short-term basis. Let's look at the pivots. I'm just going to pull up pivots here. We'll go with the SI. It's all connected. Do we have anything here? We really don't. If you look at that resistance level that we were just talking about, I mean, those are the highs that reside through here. I'm not really seeing too much in terms of, I mean, our next pivot's here. And our center pivot, or our main pivot, is right there. So we're really not getting a signal here, right? Not through the pivots. But we don't need the pivots always to give us an entry point, a potential entry point. These are just potential points within a paper money account, obviously. But let's go back to it here. Let's go to our silver, and we're going to go back to our 5-minute. We're going to zoom back in again, and we can say this, that this was a shorter term 5-minute move. Okay. That's like a flag type pattern, right? I mean, in this sense, you're getting an upward move and you're getting the consolidation like a flag. Now, technically, you don't get a flag is really, this set up, and oftentimes, you're getting that follow through that would come through afterwards. But just looking at the pattern itself, excuse me, it's kind of sort of a scenario for a flag. Look at the size of the move. A lot of times what traders will do is they'll use this Fibonacci over here, and they'll say, here's the bottom up to the top, and if I can hold that 38% or that 50% level, hold that level and get a breakout before I, retrace below and close below the 61.8 right here, okay, then that could be the type of flag that they might be looking for. And so, in other words, a breakout above here before we go down below the 61, right? So, assuming we don't get a pullback here, that could be a possible entry point right there on the upside. I just put a plus sign there for the up end. Now, we're still kind of moving around. It's very, very volatile right here. Some traders that are very, I would say, which is more aggressive, would say this. They would say, we come down to the 38.2 and we do kind of what we did over here, or kind of what I've shown you on the Fibonacci 50% pullback, and that's this. You come down to the 38.2, and then as soon as you get literally one tick above it, that is the potential entry point. Okay. That's a pretty big move down on silver. And I mean, well, it's a 5-minute chart. This is like a blip on the daily chart, but we're in the 5. So there it is. See right there? There's the possibility of an entry point right there, because we went below the 38 and we went right back up above it. Okay. Now, some traders might say, well, let's wait for a close, because look at this. It looks like we're coming right back down to it again. So that's the question. And so they might want another close there. But again, this is kind of more like off the bottom end of the flag, right? So if I'm going to clear this off for just a second, kind of highlight this. If this were a flag over here, right, flagging, we're looking now kind of like, possible entries towards the bottom end of the rung, as opposed to that resistance that we've spoken about up here. But there can be, here's a way here and here's a way here on these flag patterns. Some might try to get it low, some might try to get it high. On the low end, though, it can be sort of the additional indications you're getting of it. You might get a bounce there. You might get even like a cross above the 10 or 20-minute moving averages or something like that to get above that point, right? Like it could be like, let's do this. Let me just add a simple moving average in here real quick. Yeah, that's a 9. We'll go with a 10 here. And we'll get a little bit thicker so you can see it. There we go. So you see our 10-period moving average? There's your spike below the 38. Notice you came right back up above it. Like I said, that could be an entry by some, but they might be waiting for additional confirmations. What would those additional confirmations be? Well, how about a couple of positive closes? Look at that. We're back to below the 30 again. 38.2. Another couple of closes, maybe two closes higher, right? Or a break above, a close above the 10-day, in this case, 10 bar moving average. We're on 5-minute bars here. So there could be a lot there. But the backdrop for silver, again, as we go ahead and take a look at this, let me shoot back over here and show you. Let me kill the fibs. You see what we're potentially trying to set up for? This follow through here. And this is just a matter of trying to set up those shorter term kind of entry points to get into that trade is what we've been doing with the 60-minute and the 50-minute. I think for a lot of traders, there's just been so much consolidation down here. They might just simply be waiting for a break above right here. Let's zoom back out. These prior highs, right? It's just a lot of volatility there. So we shall see on that. Okay. Another thing, too, I wanted to highlight on a big scale. Now, I had to build this. I built this in my ThinkScript class on Friday, and I shared this out. I'm going to share this with you guys right now. Again, those scripts aren't guaranteed for timeliness or accuracy, but I'm going to go ahead and highlight it. We'll go back to a daily chart. And what it is the gold-silver ratio. And sometimes the gold-silver ratio can get pretty out of whack. It's just looking at gold prices relative to silver prices. Let's go ahead. We can keep that color. That's fine. And there it is down below. In fact, I'm going to take the volume off. I thought I saved that, but it's not saving it. Yeah, okay. So there is the gold-silver ratio. Okay. The higher this ratio gets is an indication that gold is outpacing silver. And what I wanted to do was highlight this right now and just show you like long-term. Oh, that's long-term, 15-year weekly. You can see where we're at over the past really 15-year monthly chart, where we're at over this time frame. And this was really kind of a major peak right there. And you can see over here, that was sort of an additional peak. Prices bounced off of that level. Silver spiked higher. In other words, gold was outpacing silver too much. There was kind of this sort of catch-up trade in silver because the ratio between the two had gotten so wide, right? Gold relative to silver. This was kind of an extreme. That was obviously, this is kind of a rare event. This is like the pandemic once every, 100, 150 years. So it's pretty far out there in time. But if you come over here and you look at this and you just say, well, what about outside of the pandemic? What about these levels through here? So possibly, if the gold silver ratio were to hit any of these, it might spur a move in silver as well. So I'm going to throw this out here. In fact, I want to do this for you guys. I'm going to share this just in the chat, and then anybody who's viewing this on the recording, what I can do is just put it in the description section under more. It's a very short script, but it's interesting nonetheless. And you get some of these correlations. Okay, fine. There it is. Put this in here for you guys to take a look at that. I've done different correlations on other scenarios as well, but yeah, it's a lot you can do there. Okay, let's do this. And it's kind of interesting to see big picture perspective where you stand. And by the way, if you were just to go over here and do something like here's a 3-year weekly, you can see this range up here. Where have we kind of been bouncing off of? About 90. And if you don't have the gold silver ratio, it might not make any sense, but notice how well that correlates with these moves over here. Not to say that it always will. We're just saying we're trying to use additional sort of indications for potential. That was above 90 potential support points. So, okay. All right, let's do this. Okay. I think we're good there. Brent, thank you. Got us caught up on our chats. Okay. Now let's see, how are we doing on time? Oh, okay, I think we've got about, okay, I've got a little bit more time. Excellent. All right, just looking down at this hour always throws me off, so I always have to do a reset in my own mind where we're at on this. But that is silver, and so that could be an area right there. Bounce. See, we're still bouncing off that 38.2 that we'd had in here. We'll see. Does you get a couple of closes, whatever the case might be. This could be one though, and then something like this as well. Where might a potential exit point be? Well, as we were looking at this, I'm going to pull this back. We'll go to our 60-minute chart, the 1-hour charts here. Where might the target be on something like this? Well, with the flag patterns, the target can be in this range over here. Like, for example, if we're over here and we wanted to do, it's oftentimes the size of the pole, the move of the pole, like this. So you take the pole itself, you measure that pole off the bottom. You can see, I just kind of eyeballed it, but we're probably pretty close to a target there, right? Well, we're looking at this pole over here. This is outside of, obviously, pivot points, but it's a different method. We're using price patterns. But this range right here, depending upon where we bounce off of, if we start to break higher, let's say we break above this level, a trajectory, I'm just eyeballing it again, would be something similar to this move. And that could be a short-term target. Again, short-term, we're intraday, looking at futures on an intraday basis here. This silver futures contract on an intraday basis. And so could that be a potential target? Sure. Some traders might do something like this too. They could say, well, I'm going to enter 2 contracts here. I sell one here and I let one run with the bigger daily chart that's expected. We don't know if that would unfold either, but there might be, that's our weekly. But let's say, for example, you see the next one. What has kind of been the theme of these runs here? They're not exactly all the same, but you can see they're similar in size. These moves higher. Will we get another one of these on a daily? That's a lot more. That's a lot higher than our 5-minute, which was probably a target like right down here. So some might have an extended move over there too. Now with silver over here, we can go ahead and take a look at it and just see, anytime anybody, you always want to be familiar with the tick sizes and the effect of the tick size as well. This is, as you can see over here, under the silver futures contract, the tick size 0.005. That gives us a tick value of 25. So it's not a very big move for this tick value, and that would be that's a tick to the upside. You'd be looking at that, this would be a positive $25, or to the downside a minus $25 on a 0.005 tick. Notice down here we've got one that's substantially less. That is the /SIL, the 1,000-ounce silver, and this would be it would just carry less weight, obviously, in terms of what you're getting. The tick size is just a lot less, right? You can see that. And this might be suitable for other types of investors that don't want to have just that level of movement there, that volatility there. I mean, just in terms of the size movement of the tick, right? You can see the initial margin over here as well. It's required, but I was just thinking in terms of the 2 contracts that we mentioned. Something like the /SIL would be much better suited if you didn't want a really large move upside or downside relative to just the SI contract. So that is there. And by the way, this is a great place to look for the just a number of these others to focus in on too. There is let's see, copper. Oh, Q. Yeah, there's a mini copper. Excuse me, I'm sorry, that's a nat gas. My apologies. Wait a second. There was one in there. There's quite a few to look at, but I thought, let me just see, a lot of these micros up here too are like 1/10 of the amount of your standard contract. You can go in and take a look. Like, for example, that Dow one we looked at. The Dow one is actually, the tick size is a $1 move is only 50 cents. 50 cents. So for every dollar the Dow goes up or down, the mini Dow, E-mini Dow, it would just be 50 cents relative to Let's look at the Dow. The Dow's going to be 5, right? So not $5, but 50 cents, tenth of that value. Where is your Dow? Where are you? There you are, right there. Yeah, the $5 for a 1 point move. So you can come in here and get some of these that are just a lot smaller tick value on the tick size changes there. Okay. All right. Well, let's see, folks. That's what I had in store for you today. Uh, hope you found that informative and useful. Let's go back and take a look and just see how we're doing before we're done here on our pivot points. Let's roll through our pivots and see what progress we're making. Not a ton. We're still stuck within these ranges here on the pivots. Of course, we can look at these towards the end of the day. There's your YM. It did ultimately have that spike. Not before it slowed down a little bit, broke above the VWAP line, bounced off that VWAP right there. Are there any trades here on the pivots? There are not in the way that we trade, at least in this class, and that is because we're in the middle of these two. Trades would come off of a bounce here possibly, or to the downside, but this was certainly an upside move. And then lastly, how is our RTY doing? TY right there, is just coming right down below there. So this is one you could be watching going forward. We're still kind of in a sideways range. If you tested this one time and you didn't break through, here we are again. Some traders might want to wait for, we've talked about in this class, for a downward move, a downward trade if we were taking this pivot point. Again, it is precarious on that pivot because it can be up or down. We've got to use other indications like the trend, but they might be looking for a couple of closes, 2 closes below that center pivot line before they're willing to take a trade on down here. But there you go. Interesting. But there it is. It's breaking lower right now as we speak. And so something to keep an eye on, folks. But went through today. We talked bigger picture. We took a look at multiple time frames. We wanted to look at the longer term time frame and see if we could see how that might set up with that shorter term time frame. We did that on a couple of these, and we looked at gold, we looked at silver as well. But always keep in mind, in what context are you looking for the move? In fact, if you put a trade on, on a 5-minute chart, it's probably really important not to set like your exits on a daily chart, right? Because that range might be so high and far above, this flag pattern like over here that you're setting up, that maybe you're just looking for a flag pattern to reach that range up top here, as opposed to a daily chart target. So you want to keep those in check. But again, maybe a part of an entry, you're saying, I'm taking on a short-term trade, but some of those contracts or whatever the case might be, contracts, I'm looking for an extended move on a daily chart after it's met its 5-day time frame. These are all very, very important, things to remember. Trading the time frame that we got our signal on. If there are greater time frames that fit, fine, but we don't ever want to just keep extending that target. All right, that could be risky, right? Because it's outside of what we're seeing normally on the pattern setup on a short-term basis. All right, everybody. Well, that is what I had today. Again, love to have you subscribe, bottom right-hand corner of the screen, and definitely like today's presentation if you like this kind of content coming up on it within this class. Thank you, Brent, for your help so much, folks. Thank you for your comments and feedback. Great to be with you. All right, folks, we'll see you next time.